For equity markets and for the debt markets, what is the kind of outlook that you have for this entire year?
So I think as far as, let me start with debt markets. I think, you are coming towards the end of perhaps interest rates rising, I mean, 50, 100 basis points, 50 basis points extra may happen, may not, but you're coming close to the peak. I think interest rates are at elevated levels, and it is a good opportunity for investors to lock in yields. So that is what we are excited about. I think one category of debt funds that really has seen its sort of mojo is target maturity debt funds, which are, started with Bharat Bond, but they've essentially allowed investors to lock in yields at very tax efficient rates, yields above 7.5% now if you're locking in for 5 years plus. So I think that continues to be the opportunity for fixed income investors. And in light of volatile equity markets, I think fixed income poses a very important alternative. As far as equity markets, it's hard to give a 1 year outlook. And,
Yeah.
it would be unfair to say that the 1 year is going to be an easy one. We do think global volatility, inflation in global markets, recessionary concerns
Yeah.
will India not immune from volatility, but we're still very constructive on the domestic economy from a 2 to 3 year period.
Absolutely. In fact, I was coming to that. How would you really see Indian financial markets placed in the global context as we begin this 2023? And what could be the impact, if at all the recession were to hit, on individual portfolios? And how should one be prepared for it to be able to, safeguard one's capital right there?
So I think there are two parts. There's markets, and markets are never immune to global volatility. But if you look at economy, I think over a 2 to 3 year point of view, India is relatively well placed. And there are a couple of factors. I think one is private capex is genuinely coming back. You are seeing an uptick in consumption. And in global markets, like in the US, inflation is probably at historical highs. They haven't seen these levels since the 70s. India has sort of been able to handle this a lot better. In fact, I think some of those inflationary concerns in the Indian context are also coming down. So I think from a portfolio point of view, the way we see it is, domestically inclined companies. So whether it's your beneficiaries of PLI, whether it is manufacturing, whether it is defense, all your domestic companies that are benefiting from private capex, they are likely to do well. Your more export oriented companies, so that is your IT services and others, might be laggards because they are more hit by recessionary factors in the US and Europe.
If you like the video, do like, comment, share and subscribe.